Researchers in gender inequality often point to what's known as the pink tax. So what's the pink tax anyway? A pink tax is a price discrepancy that calls out products and services marketed to women that cost more than identical or nearly identical versions marketed to men. About 5 years ago, the issue got a lot of attention when New York City's Department of Consumer Affairs found many instances of gendered pricing when it examined 794 products sold in the city for consumers of all ages. However, researchers have been noticing and analyzing this phenomenon since at least the 1990s. When a company sells a pink product, the female version, for more than a blue product, the male version, the additional revenue from the pink products does not go to the government. The only beneficiaries of the pink tax are the companies who charge women more than men. The tampon tax, by contrast, is an actual sales tax that many states impose on feminine hygiene products, a cost that's largely borne by menstruating girls and women, though also in many cases by their fathers or husbands. This is a separate issue from the pink tax, and although it's related, I'm not going to be talking about it here. The pink tax also doesn't refer to the cost of items such as lipstick and menstrual products that many women use and pay throughout their lives, but that most men do not. Several states have passed laws against discriminatory gender-based pricing of products and services. There's also been at least one attempt to pass such a law at the federal level. The goal is to regulate seemingly unjust price discrepancies out of the existence. After all, women already earn less income, why should they also pay more than equivalent products and services? Most discussions of the pink tax are not about an actual tax, but in one instance they are import tariffs. In the US, clothing companies pay higher import tariffs on women's items such as silk skirts, wool jackets, cotton suits, suit jackets, blazers, leather shoes, and golf shoes. On the men's apparel side, import tariffs are higher on cotton shirts, wool suits, synthetic fiber suits, and swimwear. Some goods have no gender-based tariff differences, while others have large differences. Overall, tariffs on women's items are higher. Clothing companies can address this discrepancy by increasing the price of the item with a higher import tariff, which may result in a gender-based price difference that is actually based on the item's cost. The other option is to price both items equally, assuming they are otherwise the same, which means either the producer, the retailer, or the consumer takes a hit. There's a study that covered 20 years worth of tariffs on men's and women's apparel in 167 countries. The study's authors found that imports of women's goods, on average, are taxed 0.7% more than imports of men's goods, and contribute to the pink tax. They also found that increasing women's representation in legislatures could help remedy the problem. Governments can contribute to gendered price discrimination, though, through distinct tariff rates on products that are essentially identical in form, save for the gender of their target consumers. Higher import taxes on women's version of goods are in turn passed on to wholesalers, then retailers, and finally imported upon women consumers. The pink tax may not actually be a tax, except in the case of disparate import tariffs on women's apparel, but hundreds of products marketed towards women end up costing more than nearly identical products targeted towards men. Evidence of gendered price discrimination clearly exists, even if there's no room to debate why it exists or how serious or costly a problem it is. What are your thoughts? Leave your comments down below. And as always, take care of your money.